Hi everyone, I hope you are all safe and healthy with your family and friends. This video we are going to learn about 11th Standard Accountancy, Chapter 10, Depreciation Accounting, Exercise Sum number 5. Let's read the transaction, that is calculate the amount of depreciation and depreciation rate from the following using straight line method. Also give journal entries for the first 2 years. The books are closed on 31st December every year. The transaction is January 1, 2016, payment to vendor for purchases of machinery rupees 1,40,000. January 1, 2006, transport cost rupees 1,000. January 1, 2016, installation cost rupees 9,000. Estimated scrap value at the end of the life rupees 45,000. Estimated life is 7 years. Okay. What they given, what they asked to us. So listen here, they given for calculate the amount of depreciation and listen, they given here, okay. What they ask, we have to calculate the amount of depreciation and the rate of depreciation. And third one is pause the journal entry for the first 2 years, okay. We have to do the these three things, okay. First, let's calculate the amount of depreciation, okay. So what's the formula for the amount of depreciation? Original cost of asset minus scrap value divided by estimated useful life of the asset, right? Okay, we have to find the original cost of asset. Here given the purchase of machinery rupees 1 lakh. With this we have to add transport cost 1,000 rupees and installation cost 9,000 rupees. So 1,000 plus 9,000 we will get 10,000 rupees, okay. So we have to add that 10,000 with 1,40,000. Why? Because whenever you purchased a new asset, you have to spend some money for transportation cost and the installation charges for the fixing the asset in your company. So you have to add these transport charges and the installation charges also with your purchasing new asset, okay. So for that you have to add 1,40,000 rupees plus 10,000, you will get 1,50,000 rupees. This is the original cost of the asset. The estimated scrap value they have given here, that is 45,000 we entered here, and estimated life divided by how much years? 7 years. How many years? 7 years, okay. So now we have to subtract 45,000 from 1,50,000, we will get 1,05,000 divided by 7, okay. So now we have to cancel it. 1 7 is 7, remaining 3 we have to add here, so it converted into 35. 5 7s are 35. This 0 is to be added here, okay. So 15,000 rupees. So 15,000 rupees is the amount of depreciation per year, okay. Now we are going to find rate of depreciation. We have to calculate rate of depreciation. The formula is amount of depreciation divided by original cost into 100. Just before we find the amount of depreciation, that is 15,000, we have to enter here, and the original cost is 1,50,000 into 100, okay. Now we have to cancel it. This 15,000 is to be cancelled. For this 0 is to be cancelled, remaining 10. So the rate of depreciation is 10%, okay. Now you have to pause the journal entries for the first 2 years, okay. So the format of the journal entry you already know, that is a date, particulars, LF, debit rupees, credit rupees, okay. Whenever you purchased a new asset, what's the journal entry? Asset account data to bank account. Purchases new asset. So asset account data to bank account. Date of purchasing asset is 2016 January 1. Machinery account data to bank account 1,40,000 rupees bought for machinery. The narration is bought machinery. When you purchased machinery, you spent some expenses like transportation expenses and installation charges. So you have the same journal entry, you have to enter, pause for the transportation and installation charges. Okay, so the same date also you have to enter here. So the journal entry is machinery account debtor to bank account 10,000 rupees. This 10,000 rupees is transport charges 1,000 rupees and installation charges 9,000 rupees. You have to add this both amount, you will get 10,000 rupees. Okay, the narration you have to write transport and installation cost include on purchases of machinery. Okay, so every year the closing date also given there. So the account is to be closed on 31st December every year. Okay, so a company provide the depreciation at the end of the every year. Okay, so the date is 31st December 2016. Okay, so at the end of the every year a company provided depreciation. The depreciation journal entry is depreciation account debtor to machinery account 15,000. Depreciation provided for the first year, and you have to transfer that depreciation into the profit and loss account immediately in the same date. Okay, so that journal entry for the transferring depreciation to profit and loss account is profit and loss account debtor 15,000 rupees to depreciation account 15,000 rupees. Depreciation transferred into the profit and loss account. Okay, so first year depreciation is completed. Now we are going to find the second year depreciation. They ask pass the journal entry for the first 2 years. So the second year depreciation dated on 31st December. Why? Because a company provide the depreciation at the end of the every year. What they given accounting closing here? 31st December. Okay, so you have to enter 31st December 2017. Depreciation account debtor to machinery account, you have to enter the same amount, 15,000 rupees. Why? Because we are following the straight line method. Which method you are following? Here given here. The information are given here. You followed straight line method. So in straight line method, the depreciation value doesn't change. Okay. So depreciation account debtor 15,000 to machinery account 15,000, and we have to transfer the depreciation account into the profit and loss account in the same date. So 31st December 2017, the profit and loss account debtor 15,000 to depreciation account 15,000, depreciation transferred to profit and loss account. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.